TJ the Wheel Deal coming at you live. It is Friday, July the 11th, 10:47 a.m. Texas time, Central time. We're going to get into it. I've just got my TV that I'm setting up over there in the background to make sure I am showing you all the right screen. So it's kind of a way to police myself because sometimes I'm talking to y'all about a trade and I don't even have the right screen on because, well, that's what happens when you're live, right? You make a lot of mistakes. So it is what it is. I say SoFi when I meant Palantir. I say Riot when I meant Clean Spark or whatever the case may be. It's just a shit show sometimes whenever you go live. So is what it is what it is. So anyway, appreciate you guys tuning in. I'm on the background over there. I can see it. We're in business. Let's go. Let's go. What's going on, Wheeling, Idaho? What's going on, Chris? What's going on, Chris? Again, we're not there yet. I'm gonna show y'all how we have a path to get there. And I've been working on utilizing the Tasty Trade charts. I think you guys are really going to enjoy this. What's going on, everyone? I hope you guys are doing well. Let's go. Let's get into it, guys. Let's get into it. My name is TJ the Wheel Deal. I sell puts. I sell calls for a living. I roll when it makes dollars and cents. I'm pretty much the only channel that you're going to find that trades live and only live. That's it. So what we do. Classes in session. And I have a course and I have a Discord and I have any of that shit. Tune in. We're going to sell options live and you're going to learn how to do it. And, if you're smart, you're in the front of the class. If you're not so smart, you go to the back of the class. And if you want to get smart, sit in the front of the class, right? It's one of those things. And it's always live Q&A here. Always live Q&A. So if you have any questions, put them in the chat. I will do my best to answer them. I usually have panelists come on, help me out as well to answer the questions. And then the chat is pretty good, pretty good at helping you out as well. So this is a very, very friendly community. This isn't, we don't just sit here and like shit on each other's dreams or shit on each other's stocks. Nobody wants to hear that their girlfriend's ugly. We don't do that kind of stuff in this community. And it's really, really awesome that we're like that. We're really tight knit, closely knit, and we're here and we want to help each other win. Nobody's in here boasting about how they're better than everybody else and all this other crazy shit that you see on other channels. We don't do that here. Everybody wants to make money. And this is, our saying as a team here, as a community is, you can be right, we'll be rich. We're going to have a lot more fun being rich. So let's get into it. Let's see what's going on with the portfolios. And I will feature my son's account a lot today. But then after that, it's going to get real fun because I'm looking for 4 $500,000 swing trades. It could be a stock that I already have a strangle on, but obviously no stock that we already own. We're not going to add to a position, if you will. So I want y'all to come with y'all's best elevator pitches, whatever you have, and I'll be popping off anywhere from 20 to $100 for the winning trade, if you will. Just the idea. You just need me to give me the ticker and give me the pitch. And I know how to vet a stock pretty damn quickly, and I'm most likely I'll already be familiar with that stock. I'll have already been eyeballing it. And we're just looking to do giveaways anyway, because the channel's been making some money and I like to always give back to the community. So let me see if I can get it going here and do present. So put my ugly mug over here. And you guys should see kaleidoscope action. And then there is this. So we are featuring my son's account. I'm just waiting for it to populate over there on the big screen to make sure we're good. We're good. Super. Absolutely super. So here we go. So we got son's account. It's just one stock. We've got SoFi, and it is a short strangle, and it's a big one. And it is a big one. Because if you look at the son's account, there's $103,000 in cash. So this is an agreement to buy 10,000 shares of SoFi at 20 or to sell 10,000 shares of SoFi at 24. So it is a sweet spot trade. It is a short strangle don't have the ability to buy 10,000 shares in this particular account. And we certainly don't want to be in a situation where we have to sell 10,000 shares of SoFi because we don't own a one. We are at zero, settle, right? So let's talk about it. Why? Because I looked at the chart and I'm like, I don't think it's going to get to $24 within the next 35 days because the days to expiration here is 35. So that is the bet. The bet is that SoFi is going to stay between $20 and $24 within the next 35 days. And if that occurs, this extrinsic value right here that you see, $21,200, is going to go from the extrinsic value side of the ledger to the net liquidation side of the ledger. And the net liquidation on the portfolio, I'll show you guys here in a second. I just got to queue it up because it shows account numbers and this is just a lot of shit, right? So we got to be careful. Got to be careful. I'm not saying you guys would do anything. I'm not saying that you wouldn't, because there's some shitty people out there, guys. It's just, it is what it is. We have to protect ourselves. So here we go. I'm going to eventually queue it up here and figure it out here. So I'm going to put it right. There we go. So there's that. So there is that. So then now I'm going to get off of this here for a second. And I'm going to queue it up so that I can show you on net liquidation value. So give me a second. So give me a second and I'll try to get it together over here. How can I show this? Bear with me, guys. Bear with me. There's got to be a way. I've done it. I mean, I've done it a few times. Oh, yeah, it's under balances. Okay, 1 second. Here we go. Here we go. Here we go. Here we go. Then now I just got to go right over here and hit this guy right here. And you guys should be able to see it. I'm just waiting on the screen. There we go. There we go. Plain as day. Make it a little bit bigger for you guys. So there we go. Net liquidation value is $82,289.61. The options buying power is 55,674. The stock buying power is 111,000, blah, blah, blah. The long stock value, there's no stocks owned. The long options value, there's no option, there's no leaps owned. Long futures value, I don't deal with futures. I don't even really understand them. Long fixed income, nothing. Short stock value, nothing. So we're not down any shorts. We're not shorting any stocks here. Short option value is the 21,500. So that is the extrinsic value. So if these options expire worthless, if SoFi is above 20 and it is below 24, both sides of that trade would expire worthless, and this 21,000 would now go to the net liquidation value. And if you add this to the, and I gotta go slow here, bear with me. So if you add the 21.5 to the 82, boom, we're there. So that's the game. That is the game, guys. That is the game in a nutshell. So anyway, what I want to do is do some live Q&A, and then we're going to go through a portfolio update. Oh, yeah, another thing I wanted to show. Another thing I wanted to show is this is the way that I'm going to be showing the charts now, guys. This is, hopefully you guys can see this and appreciate it, because it's going to give you a real nice visual representation, if you will, on how I'm going to be showing these portfolio updates, if you will. So we go to my son's account again, and now I go here to the chart. I've already set it up on the chart for you guys. So this here is the Bollinger Band. So you have the yellow line is essentially going to be your 20-day simple moving average, and then the purple line is going to be two standard deviations, and then this little bluish line here is going to be two standard deviations to the lower end, two standard deviations to the upper end. This is my go-to move. It's always been. And I'm going to talk to y'all about Bollinger Bands at length. I'll try to bring Uzi options, somebody that's much more of an expert at this. I consider myself a novice at at the technicals when it comes to explaining it. But I've sat in so many classes that I really understand it. I just don't understand it well enough to teach it, if that makes sense. So we're going to go over the Bollinger Band and why it's a real good move, but you got to keep in mind that it's also a lagging indicator. And I have the RSI. So the only thing that I ever put on the screen for myself on the chart is I slap the Bollinger Band on with the two standard deviations or one standard deviation, depending. And then I have the relative strength index. Above 70 is overbought. Below 30 is oversold. And you guys can already see here that it's at 74 and some change. So SoFi's been running hot for a minute. And then the only drawing that I do on the chart is these two orangey lines. These are UT colors right there, burnt orange, right? So on the bottom, it's 20, and on the top, it's 24. Those are my sweet spot lines. Those are the short put line is at 20, and the short call line is at 24. And then I highlight that area because that's paid dirt, right? That is paid dirt. And then I have this red line here. So the horizontal lines are the strike prices at 20 and 24. And then I have the vertical red line because that's a hard stop. Why? Because that's expiration Friday. And then I have it on the weekly candle. So the reason I like the weekly candle is because here along the way, typically with the Tasty Trade Way, I'm going to have to manage this trade theoretically. But I'm going to try to let this go all the way to expiration so that I can capture all of that extrinsic value so that my son's account can have $100,000 in it, if that makes sense. The net liquidation value, because that's the goal, because we have the whole screenshot and everything, the thumbnail, right? $100,000 was SoFi, that's the steed, that's the horse that we rode. And for those of y'all that haven't been following the channel that long, a lot of this money was made with SoFi and Riot. A lot of this money was made with just those two companies. That's why I'm wearing the Riot hat, because it's the one I have, right? I don't have one of SoFi. 1 second. Hey, bud, I'm actually live on YouTube right now. No worries, bud. Bye-bye. Anyway, that was a mod comment. We know he ain't watching the channel. But anyway, so that's the game. So you can kind of like see it. You can see it and be like, man, it's dicey, but it's at the upper end of the Bollinger Band. It's already pierced through the Bollinger Band. It's obviously well above the 20-day simple moving average. And it is just running and running and running. And if you look at it, it hasn't been here before since the IPOE days. These are the IPOE days. And this is whenever the whole SPAC thing happened, and then it went up all crazy, and then it just had a fall from grace, the whole Shamat thing. And then it was just consolidation, essentially. Consolidation for like 2.5 years. And then it started making its way up. And this is kind of where we're at now. So people could argue that, well, if it goes above, say, $24 or so, or maybe 25, because if you go over here, because all time was, in this area over here, one of these was the all time, that there's no resistance up there. And all that is true. But that's where technicals meets fundamentals for me. Valuations matter. This stock and this company, as well as it is performing now, we still have some issues. One is priced pretty aggressively now. We still don't know what's really going to happen with Galileo. It seems like that was a big thing. Is the technology platform going to deliver? Is it not going to deliver? And then the stock goes up, and people forget it. They forget about what was probably keeping the stock down. Right? Is there was a breakdown in the narrative. So we're going to have earnings here pretty soon. I think it's on 7/29, I believe. Could be August the 4th. I don't remember. It's one of those. And we're going to know. We're going to know a lot more. So I just felt very, very comfortable here at $24 35 days from now. So we'll see. We'll see. That's the bet that I made. Now, if SoFi just wants to keep going on a run, what's the game plan? The game plan is to increase the strike price on the call for a debit, and I will finance it by increasing the strike price on the put. So I only want to roll up, even if I do so for small debits overall, because I have enough buying power to do that. And whenever I get to the other screen, you guys will see there's quite a bit of buying power that I left myself for this. So that's the idea. The idea is just you do a construction project. Right now I have it at 20 and 24. If I need to move it up from 22 to 25, because it just wants to keep going up and I need a higher ceiling, if you will, then we'll take on that construction project in a week or two. But I'm going to try to stay in this thing. Until the end and manufacture the win and get as close to the $100,000 net liquidation value as possible. And then we're going to do it again. And we're probably, if we love the earnings and things are looking really, really good and we're very, very comfortable, we're going to stick with what works. So the idea is now, okay, well, why not just buy the shares? Why not just buy the leaps and all that stuff? Is because I want to know exactly how much money we can make. And that is why I wanted to be able to show that there's this net liquidation value. There is the extrinsic value. And if everything expires worthless, the extrinsic moves over to the net liquidation value, and you can accurately gauge what the portfolio would be worth. And if I could do this over and over and over again, I could see a path to getting this account to $250,000 just by running a couple of one or two short strangles simultaneously, leaving enough buying power and being wide enough. I would ideally like to be at least $1 wider on SoFi. Like to be more comfortable here, I would have rather been at 20 and 25, say. But we can get there. So I might not be able to get the net liquidation value to 100,000 within the next 35 days per se. But by the next cycle, I feel like I will be able to roll to 26, 27, whatever we need, depending on what SoFi is doing, because I'll have enough buying power to roll from 20 to 22 to 23. And eventually we're going to be in that sweet spot, and SoFi will be able to coast to the bottom. So that is just being very optimistic with SoFi, because it's going to go up and to the right, and it's never going to come back down. That's what a lot of people act like on the WhatsApp group. So now let's talk about something more realistic. SoFi gives back a lot of the gains. Oh shit, now what? Awesome. Well, two things can't be true, guys. Two things can't be true. It can't be trading at 24 and $20 at the exact same time on April the 15th, or August 15th, which is expiration date. So if it were to come down, then the idea is to do the construction project, but we would roll the entire strangle down. So we would go from 24 to like 23, 22, and then we'd move the 20 to 19, 18. That's actually the best case scenario for us, because the risk to the upside is always unlimited. The risk to the downside is just how low will the stock go. I think the new floor on SoFi after this move and after the earnings that's going to come out, which I think is going to be another triple beat, double beat for sure. But I think there's going to be a triple beat potentially with a guidance raise because now they're going to start pricing in rate cuts for later this year or next year. I think the new floor on SoFi is probably going to be $15. So that would be like the perfect scenario for us is if SoFi were to give back some of those gains, because then that's going to take all the pressure off of the short calls. The short puts are always more manageable for me. And this is a trade that I'm comfortable with. It is SoFi. I'm super, super comfortable with. We can be in this thing for the next 12, 18, 24, 36 months and just keep rolling, adjusting, expanding, contracting, rolling, adjusting, expanding, contracting. We should put that on a fucking t-shirt and do it over and over and over again, all the while moving money over from the extrinsic value to the net liquidation value and growing the account that way without ever having to own any shares of SoFi. That's the game. Follow along. We'll see. Anyway, let me take on some of y'all's questions and we will get going with the second part of the episode today, which is, are there any good swing trades out there, guys? Everything's extremely frothy, I feel. Are there any opportunities out there? Because we got a lot of buying power, a lot of money sitting, not necessarily on the sidelines because it's all committed to the strangles, but we could go buy $3, $4, $5 million worth of stocks today. The question is, which one? Which one? When I feel like so many of them have already run, a lot of them are getting ahead of their skis, if you will. You know that say, like they're getting a little too far out in front. So I want to hear from you guys. Give me your best elevator pitch, and I'm going to put the link in the chat if you guys want to participate in that and give me your best elevator pitch on if you had $500,000 to put in a stock and you were going to sell a covered call against it because stocks to go down too, so we have a little bit of protection, and you're totally okay getting those shares called away. You're just looking for 5, 6, 7%, 10% max on the trade, wipe your hands of it and move on. And you're just trying to build your cash pal, your war chest. Which stock would you choose and why? So anyway, let me see if I can get over here. What's going on, Stefan? Let me catch up with you guys and we'll go from there. What's going on, Andrew? BTBT, Weeble, they're holding pretty decent in the mid 12s. Bull market are bound to go up, even with the recent news. Could be an easy swing up. They started selling puts on Bull. TSL earnings play next week. Spike AV. Old T is a cheap ETF for my budget. I will be getting 10K to play in the future. I like it because it's filled with growth stocks. It has really, really high management fees. That's the only thing that I really know about Old T, but a lot of people seem to like it. We'll sell puts, pick up shares, and covered calls. Right on. Right on. Looks like we have our first customer. Hold on one second. Add to the stage, Ryan. Ryan, TJ the Wheel Deal here. How are you?
Hey, TJ, great. This is really cool. Uh,
Nice to see you. Nice to always. I can always tell when I have a friendly face on the other side of the screen. When sometimes people act like they're on an episode of
Good.
Gladiator.
Oh,
Are you
great.
having fun now?
I've got too many cameras on.
How are you today?
Is somebody talking right now and I have something on?
I'm not sure. You sound just fine over here, and I don't have an echo or anything, so I'm not
Okay,
sure.
cool. All
Yeah.
right, yeah. Hey, TJ, thanks for letting me come on. I guess I'll get to it. My pitch is Oscar right now.
Okay.
Uh, so
Tell me about it, and I'll pull it up on the screen. Go ahead.
I think I got my another browser open because I keep hearing myself.
Oh yeah, you might want to close that browser. That's probably why you have you probably have a netco.
Yeah, let
You
me.
probably have a netco. Yeah.
There we go. Okay, yeah,
Okay.
that's good. Sorry about that.
No worries.
So I got into Oscar last week after
Okay.
the big beautiful bill and the ACA drop and all the concern over that.
Yes.
So I've got I've got about 100 cash cured puts right now that I've sold, and I just added a bit heavier. So the main thing I was looking at is the fundamentals are pretty strong. Um, it's a good, it has a lot of good catalysts. I liked it overall as a company and what it does, kind of how it captures TAM in what is a pretty big um, market. So, but what really I like about it right now at this level um, is that I really look at GEX levels a lot, so gamma exposure, and then also where major support is, and it's really right now as it gets closer to um, 13, that's going to be a pretty big sweet spot. But I kind of thought that it would unravel to 15 today
So
because,
has this been trading since 21 only? Is that what I'm seeing on the chart?
yeah, yeah.
Okay.
And it just went on a big run, and it's kind of been the darling of FinTwit here recently.
So it
Um,
looks like it started in 23 and or December of 22. This thing was not real high. If I can see, it's probably like $2 or so, 234 maybe, and then $2, and then it seems like it went on a nice run, and then it went parabolic. I see a double top here. Just eyeballing it real quickly. I'm not like a technical expert, but some things are pretty obvious. So I see a double top here, and that's never bullish. And then it went down, and then it seems to be going back up. If I want to like really like start looking at it all like Uzi style, just eyeballing it, I'd say it's potentially even forming a cup and handle action right here, which who knows? Depends on what these next couple of bars do, right? So
yeah,
that very interesting. How are their fundamentals? I mean, are they growing their revenue and stuff? I can pull up stock
yeah.
analysis tool in a
So
little bit.
they are, and they've got solid fundamentals. But the big reason that it's taken a huge hit is because they are have connection to the Affordable
United
Health Care
Health.
Act,
Oh,
which of course in the big beautiful bill there's a big concern over that. But its exposure is not the same as say Centene or Molina, so other companies that really have a lot stronger ties to that in terms of revenue, but they just have a really cool model about how they get customers and how they go about um, you know it's telehealth in the sense that it's a regular health insurer, but just the way they go about it, super fascinating. But what I'm really mainly interested in right now is that, like you, I love to do short strangles.
uh-huh.
So I chose my strikes at 12, 8:15, 12p because I saw that as the major support. But I'm actually probably going to start piling into some shares here, just so I can kind of start turn around and sell some covered calls, um, because it's just at a really nice setup right now technically, and also it should hit some pretty huge support around 12 and $13, and hopefully at that point we'll see a bit of a pivot, and then I can start to go out and start to write some calls on it. But the company itself, it this is a this is a sell off. This is related. Just this is just another reason that market makers and dealers can sell it off. The Affordable Health Care Act and the Big Beautiful Bill gave them a reason to pretty much just start to distribute. And as you saw in the chart, like it ran up pretty fast, and now it's just kind of selling off. And retail is also, a bit panicking with it. But as a company, though, I was invested in SoFi for a while, and I got out unfortunately about 17. Um, I what's his name? I subscribed to his Substack. The who
Brad Freeman or Data Driven?
Data driven, yeah. Data driven got me into it, and that's where I also started following you. And it's like that. I think it's not as underappreciated of a company anymore, but it
Right.
kind of has that. It's not under the radar, but it has really a lot of potential to really grow its revenue quite significantly. And Jared Kushner is involved in it, so I believe he is.
Isn't he related to Trump or something, or married
Yes,
his daughter or something like that?
it's his son-in-law. Yeah,
Okay,
people
yeah.
can correct me, but I think he's on the board. So, and then also probably here, likely it's not for certain that a lot of the
I mean, again, and I keep hearing this fucking name right here, and I just I don't like doing it, right? Because whenever you're really going to dig into this thing, guys, it takes energy, right? I got to go back and I got to go archive and find freaking, 3 or 4 earnings calls to get up to speed on the story. And then I got to go really study the numbers and see if what they're telling me is what they're doing, right? Because you're just piecing together a movie here whenever you go and I call it the hamburger stand. You go find the hamburger stand and you see 20 people outside trying to order a cheeseburger from that hamburger stand. It gives you cause to pause. What's going on there? Do y'all want to open another hamburger stand across the street? Right. That's kind of the way that I always look at it. But you got to go get information. Like, what's the lease like? Where are they getting their product? What are their margins? What kind of debt do they have? Do they already have 3 or 4 or 5 other hamburger stands across town in other towns? Is it scalable? Like, if it was just a simple hamburger stand that you wanted to invest in, you would go try to grab all the data. The thing with the hamburger stand is very, very difficult because it's going to be hard to find all those numbers because they're private entities. With the public company, that information is readily available to us, provided that the information is accurate, right? We're not dealing with like a Lufkin coffee or something out of China or Enron, back in the day, MCI WorldCom, for those of y'all that don't know. I'm showing my age here because I've gotten my ass kicked before. But in these situations where companies that you would think were super honest don't end up being honest. So why did it pump from here to here? Like how does that happen? Because that's a lot of revenue, dude. Like that's crazy growth right there. So how does that happen?
pretty much network effects, I would say, because of the app and how so their big thing is that they connect you with healthcare providers before you have an illness or before you get sick. So it's about getting preventative measures in place before. So the logic there for investors too is that they're not going to be paying as high, they're not going to be paying out as much premiums because, or not be going to be paying off, the help the foot in the bill as much if they're trying to get more preventative care for the people, that are signing up. So they've got a good app. It's a really kind of slick interface, and I think it appeals to millennial and Gen Z in a lot of ways. I think there's probably people on here that could probably talk more to that. So I have United Health, so
So why did it go up 384% in 21? Was that the effects of COVID?
yeah, I think that was just a bubble. COVID. It was just a typical, no reason other than it had a slick app. It looked cool, and let's buy it up and run it up. So I don't think there wasn't anything fundamentally at that time. Where I think the story is flipped now, where the fundamentals are there. And again, the big scare that happened is that with the Affordable Care Act possibly be, taking away a lot of the the payments and the benefits that insurers like Oscar would get is going to have a bigger impact on revenue. But Oscar is not as reliant upon the ACA. Like if you look at Centene, CENT, that stock got crushed because something like 50% of its revenue is dependent upon the Affordable Care Act. So Oscar got kind of pulled into that narrative, and that's kind of why it's been selling off. And now it just had a downgrade again today, so another reason for it to spin out. But really, what I see it is that there's a huge negative GEX level at $15. So there's all of this negative GEX at 15. So dealers are just, the more it gets closer to that, the more they're just selling and selling and selling. So today is kind of a big day to see if it can hold 15, 14.50 or 15, because if it doesn't, it's probably going to be heading down to 13. But if it can get past this level, so for me, this is a great place to kind of go in a bit more, and then I'll probably go in the heaviest if it gets below 13. Um, and then my goal is just to ultimately start doing short strangles. If I even if I don't get assigned on the puts, I
Sure.
still want to buy shares under $13 because at that point I think it's a pretty attractive. So the other thing, a catalyst that can make it go back up is if a lot of the stuff in the bill related to the Affordable Care Act isn't actually implemented or doesn't pass, then the stock is just going to rip because there's no justification for it going down other than the big beautiful bill and some of the policy in it. So I could see it being flipped pretty quick. Kind of like, think of it like SoFi when with the whole student loan moratorium and uh,
Right.
all of that, and how it just got slammed because of all the policy related to student loans. Even though its student loan business was getting smaller and smaller and smaller, but it got hung up in that narrative for a while. So I can kind of see at some point Oscar flipping the script here, but I think unfortunately it's in a downtrend and it's going to get caught up in this negative GEX at 15, and it might fall down to 13. But I think it's one of the better bets. Oh, another thing is the IV rank and the IV percentile
Really, it
are
did
also pretty high.
66.3. Yeah.
Yeah, it's. I mean, it's not off the charts IV rank and percentile, but it's getting up there to where the premium is pretty attractive. I don't know what the IVHV is. Let me look here. I think the IVHV is. So
And
what
when
is
does it give you earnings? When are earnings? Do you know?
Yeah, let me look. Let me get on. Let me get on my trading view that I have it on here. Um, Earnings are on the 7th of August. Um, 7th of August, and
Wow, look how big that's a huge copper strip right there. That's for the implied move.
yeah, and it's got an IV rank is 67%.
Yeah.
Percentile is 96%. IVHV is still up there. It's over 1.13. So that, that's relatively attractive. It's not as high. I mean, obviously everything on April 7th had insane jump in IV, but 117%, I think is, I think it's over. I think it's got, they pumped up the IV when I don't think there's as much volatility there given how the company has performed recently.
I'm just looking at let's just see what it does to the buying power though. That's nuts, dude. I mean, like to say we do something small, just cause I almost did this one the other day, but I went with United Health because the company you know versus the company you don't, right? That literally was the whole thing. And I was like, dude, I remember seeing United Health or yeah, like up over 400, $500 for some time. And then I want to say the guy that got killed in New York, he was affiliated with United Health, right?
Yeah, as CEO.
Okay, yeah. So the CEO got shot, and then there was also some issues with like Medicare or Medicaid or something. Again, this is just me not being familiar. It's not even so much familiar with the industry, not interested. Is really more. It's more. It's like another Rocket Labs. It's another. Is there just spaces that I'm not really interested in, but they're very important companies, because everybody needs some form of healthcare. I feel um, it's kind of like my brother's at the funeral business, and we're working on getting a crematorium going, and he does the monuments because we decided a long time ago that 1 out of 1 people are going to die. Hold on one
Right.
second.
Yep. Yep.
Hey,
Yeah.
babe.
United Healthcare was a great play when it dropped down to the 260s, 270s.
Yeah,
The
one.
IV was insane. I picked up a bunch of. I went way too heavy on 250 July puts, and I closed them out. But yeah, that's exactly it. And Oscar, I think
Give
is in
me
that.
give me 1 second. I have to go talk to my housekeeper real quick. One
Roger
second.
that.
1 second. back. We're carrying the show, Gavin. What did Gavin have to say? He took over, huh? He's quick to he's quick to hop on my chair.
Where my guy at?
Gavin, get back, dude. I'm gonna squish you. I'm gonna squish you. Oh my gosh. That's interesting. That's interesting. Let me see how many positions I have. Because 1, 2, 3, 4, 5, 6,
Oh, do you
7.
see this is Bogey here. He's my guy.
Oh, nice. What
He's
is
right.
he?
He's a they're the Louisiana dog. Starts with an R. We rescued him. You can see his paws are. They found him on the street with both his paws broken, and they said he was from in Georgia, but he got shipped out to where we're at.
Ooh,
And yeah, the little guy just was like on clinging to life, and we got lucky and rescued him. And he's like the best dog I've ever had.
that is super awesome, man. Dude, this United Health, I took a flyer on it and I'm already up 13,000 on it. That's exciting. Um, it requires 169,000. Well, granted, I did 100 contracts over here. Well, it's just Oscar's just a hell of a lot cheaper.
Hmm.
That's interesting. Yeah, I'm gonna definitely consider that. I could see me. I mean, I'm trying to see how many I have. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. I could do one more. I could do one more, but 15 is the absolute max as far as short strangles. That's why I was looking for just like maybe just an actual swing trade. Maybe just like buy the shares and then sell the calls. That way I'm already covered, because I don't know that on a stock that I'm not familiar with, if a short strangles like the way to introduce yourself to that stock, because if the shit goes up all crazy and you're having to cover, now you're just pissed off about it, right?
Yeah, no, 100%.
You could have just bought the damn shares, and if it ran, cool. If it
Yeah,
did, you sold some calls, and then you can start strangling it later because
yeah,
you're already covered.
yeah.
So
No, I just went with the August 15 $12 puts, and I didn't haven't bought any shares yet, but I have an average of 70 cents a contract so far. I think it's about 75 cents right now. I don't know if it's still
let's
in.
just look, let's just look at a buy ride strategy where I just buy the shares and see what that looks like. Hold on. So this is doing that. Where the hell? How do you oh, you got to buy shares down here, I think. Is it
How is it doing?
Oscar OSCR?
And I mean, the problem with it right now too is it's an obvious downtrend. So MACD's flipped. It's got no momentum. I think what's the RSI is RSI is 40. So it was oversold. It was up to 70. Back when everything was flying at the end of June. But it's been ever since July 2nd. It's been in the downtrend.
Yeah. So which one was I where I was doing the? I'm trying to find the options chain that I was on. It was over here because I have one on here already because if I just want to go buy the shares over here, it's not letting me do that. Oh yeah, because it's going for 1470, right? Is that what you're saying?
Yeah, 14. And if you look kind of, let's see where it is on moving averages. It's already broke through the 200 days, so it's smashed through the 200 day. But in terms of some of the major support levels, 14 is kind of what I'm tracking as the next are actually the next big support. So it smashed through if it doesn't hold this 15, I would almost wait and see if it gets down to 1350. But right now, I'm seeing this as a really crucial kind of support level, um, and it's probably going to be stuck here um, because there's just so much negative GEX. I'm a big believer in gamma exposure having a big part to play, and if you look at the gamma exposure on Oscar, it's just off the charts at that 15 level negative. And right now, I think it's just a battle between retail and the market makers having to just sell, sell, sell the longer it stays below 15 to delta hedge. So, but I think it would still be a good buy here. I'm probably going to wait, till it gets down to about 1350 before I start loading shares. But I just can't see it staying in this range much longer, unless just some catastrophic news comes out in relation to the Affordable Care Act. I think that's the only thing is that if the only thing I can hope is that you know Jared calls up his papa-in-law and says, "Hey, ease up a little bit."
Yeah. They would never do that.
Right? No. I haven't seen any. I haven't seen any unusual option flow on it either. There like hasn't been any big repeat flow that's coming through, or I don't really believe in flow that much because it's really hard to interpret. I mean, sometimes you can get a read, but most of the times you have no idea. Like these guys are doing collars on it, they're doing strangles on these stocks, they're doing all sorts of stuff that we do. So you can confuse a big order with actually another strategy that might be bearish.
Yeah. I just don't know it enough to like do a strangle. What I'm saying is I don't want to have the unlimited risk to the upside. So I think it would either just be buy the shares, sell the calls, or just sell a vanilla ass short put. Like I just don't know that because I feel like this thing has been extremely volatile because I hear people talk about it on X and they usually only talk about a stock that much because it's moving so much.
Yeah. I think that's the thing too, is that I mean I've had luck by following hot stocks on X, Twitter, but I wait until it goes into a downtrend. So I wait for the first pump, everybody gets excited, and then when it has its first big sell off, then that's when I start to get really interested because right now, a lot of people are you'll just see a ton of posts right now on X about talking about the fundamentals, and it's kind of I kind of like it for that reason because I think we've seen over the past year retail stocks, Palantir, Hims, SoFi, Hood. I mean, it's a real effect. I think when you have when Twitter is really when X is really picked up on a stock, I think that it has a pretty big effect. But the fundamentals are there. I think if you dig into the company more, it's not it's the real deal, like yourself.
Yeah. Well, dude, I mean, this is what I'd be comfortable with. It's on the lower end of the implied move. It's a 21 delta. I looked at the chart a little bit. I didn't study it like Uzi, but I do feel like for it to go to 1250 in 21 days, shit's really tanking in a real big way. Um, I swear this guy's like TJ watching over my portfolio. Man, that's just crazy. So that's interesting, but there's only open interest. Oh gosh, baby, hold on. What's up, baby doll? Oh shit! 1 second. 1 second. I gotta run an errand for my wife. Give me a second.
Roger.
All righty, we're back.
Cool.
Hey, can y'all tell my stomach's gone down a little bit? I'm down. I'm down 10 pounds in the last 2.5 weeks.
Oh, that's nice, brother. That's awesome.
And
Yeah, I need to get back into that myself. I've been neglecting the gym for almost 2.5 years, and it makes a huge difference once you start getting back into being healthy and back into just doing just something, you know. So my wife she got us that Next Playground. I don't know if you've heard of that Next Playground.
no.
It's a video game system that it's kind of like, remember the Wii back in the day where you could use the controllers?
Oh yeah, yeah, yeah. Like the Nintendo, it's very
Yeah.
active.
It's like that, but you don't have controllers. It literally uses AI to track your body, and then whatever you do and however you move, the character on the screen will do that. So you can play like tennis or baseball or basketball. Yeah, it's really cool. It's a good workout. You can actually kind of get some physical activity in doing it. So it's great for kids. It's active video game, so it's actually a little bit of a workout. I got a little bit winded playing. Uh, there's one game that has train your dragon, and you try to fly like a dragon, and you kind of have to move around a lot. So, anyways,
So we'll see. So I just placed the trade for 250 short strangles. In my mind, if it goes to 16, I'm just going to cover. that way, I don't jack with it because I don't want to like. Oh, I'll manufacture the win. I can roll. No.
you know,
I'll just buy the damn shares and take them away. It's a swing trade.
I,
So
I,
we're going to
I
call this a swing strangle.
yeah, that's great. In fact, I think there's a lot of resistance at that 16, 17 level to begin with. Uh, if I look at,
I broke
so,
my chair. Hold on. Keep going. I
yeah,
got.
let me look at the GEX, the positive GEX levels as well, because I think that so. Well, there's a lot. There's a big negative GEX at 18, which could actually accelerate a move. If it's moving up from 16, 17, that could accelerate or move even further.
Undercover is what you're saying.
Yeah. No, but
So
yeah,
how
it
much
looks
how much money would that be? 25,000 times 16. It's 250 contracts, right? 25,000 times 16. Yeah, 400 grand. Yeah, that's cool. I mean, we're already making money at that point because I mean, obviously the put paid, and then it's not like the call premium didn't happen. The thing that I don't like about it is the option shape feels real weak as far as volume goes.
yeah, there's not
I
very,
see a
it's
lot,
not
I see a
incredibly.
lot more volume over here in this $20 area, which is weird on the call side.
Yeah, it's not incredibly liquid, but I think it's liquid enough that you would probably move that chain a bit, but
Yeah, it is what it is. But I'm gonna again, and this is an advantage when you're not emotionally attached whatsoever.
100%.
They got to give me my money. You know what I'm
Yep.
saying? I'm not gonna be like, oh, like because if it was like SoFi or fucking Riot, I'd be like replace order and I'll take 92. And I'm like, like I mean, I just no, like I'm like I could maybe go 93, and call life good, but I just want to get my money.
There you go.
So
I hear you, brother. Well, this has been cool. I really appreciate you. I've never done anything like this before, so
it's not wanting to dance, dude. That's the thing. So we'll see. We'll see. It's on there, but it's only 4 contracts because it's not very liquid.
no.
It looks like somebody. There we go. I got it filled. Look at that.
All right.
So we're in business. Good for you, man. I'll tell you what, dude. If this thing works, get with me, and I'll cash app you anywhere from 20 bucks.
No, 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 TJ, no, no,
I
no.
laughed at
I really appreciate this. I've never done something like this before, so this is a lot of fun, and so I'll kind of.
I'll send you a cap or a hoodie or something because I ordered a bunch of hoodies and caps for TJ.
That would be cool. So I got a little thing here. I'm actually, I am going to try to do this full time.
Oh, good for you, man.
Yeah, I'm real close. If I can pull a certain percentage for 3 months in a row, I'm going to do it. I'm going to make the biggest decision I could make, which is do, you know, so I got to prove to myself I can do between 25 to 35,000 for 3 months in a row.
Right
Uh,
on.
and my primary strategies are just going to be, I don't like credit spreads. They're a great way to do it, but I'd rather own the stock if it goes sideways, because I'm going to be so careful on my strikes that if it does hit that strike, I want those shares, because I want to turn around and obviously write put or write calls on it. But yeah, this is exciting that you had me up here, because I'm very passionate about it, and I'm a stock junkie. I just love it to death. I've loved your content, everything you do. Part of I kind of have one of those sneakers on Twitter, so I don't really like, or you wouldn't know I'm there, but your content has been incredibly helpful in my maturation over the last couple of years, especially in selling and writing calls and puts. So this is amazing. So I really appreciate it.
Yeah.
And
Well, I
yeah,
hope that and I've been following this stock enough on X to where so one thing when I am going to take on a position, guys, like this is just something that can really help you guys, is make sure that there's a lot of smart people covering the stock, because then you're going to have access to all the information. Like the reason that I made so much money in the millions off of SoFi is because there were so many bright minds that I was able to capture data from without having to thumb through all the shit myself.
yeah,
And the same thing kind of with the miners, except I was very early on the miners, because I was like, well, you can't have Bitcoin without mining it, right? So like to me, the Bitcoin miners as a proxy was just a freaking no-brainer. So made, probably half of the money we've made in the stock market is because of companies like Riot and even
yeah.
Marathon early on, and then Clean Spark here recently. Those are the three that have made most of the money, but Riot being the heavy hitter for us.
I got into iron about a year ago and traded it relatively successful, but on the downturn on the seventh, I just went heavy into the 6-7 range. And the only reason why I had that conviction was because of all the smart folks on Twitter, that do the research, and just like Chris on SoFi, he got me there. One stock that's kind of under the radar, no pun intended, that I kind of got into pretty heavy back in February was Ouster LiDAR. But that they had again, as you said, I think it's so important you find those people. And if you find a lot of smart people around an equity that are really passionate about it, there's something going on there. And that's part of the secret sauce. So I agree with you 100%.
I want to look at this one next. I think that's Trade Desk. Real quickly, somebody talked about rolling the strangle. Um, it is definitely better to deal with them because they're separate trades, guys. You sell the put and you sell the calls. I do them simultaneously, but if you want to maximize, you sell the puts on a dump and you sell the call on a pump, right? And then you're going to be wider and your premiums are going to be bigger, but you're not selling them on the exact same day. The reason that I sell on the exact same day is because that trade is not going to be the last trade. It's only the first trade. And it's the construction project of a 300-mile highway, if you will. And I'm intending and anticipating that I'm going to be in this strangle for the next 1, 2, or 3 years. So I don't have to wait for study in 75. I don't need optimal, whatever the word is, conditions to sell the put or to sell the call, because at the end of the day, a strangle is meant to be neutral. You're pretty neutral. That's why you're selling both sides. And what's the best case scenario for you? The stock's flat, the IV comes down, you bring in that contraction into the net liquidation side of the house, and the theta decay, right? Where it's a massive theta collection strategy. That's what it is. So
And that's why I love short strangles too. And one thing I'm trying to look into more is I'd like to do more delta neutral strategies. But I just think keeping it simple is the best way, which is just sell your puts, you write your covered calls, and then the next best strategy is short strangles. Like that to me, short strangles just make the most sense. Again, doing a bear put spread or credit spread in general, I think they're fine, but it gets a little too complex to manage. And if you got the capital to back it up, just keep it simple. And I've
Yeah.
just seen you over the years where you keep it simple and you don't try to do these exotic, complex strategies that just don't end up paying off that much. It's just do the work, do the research, find the right stock. Don't wait for the optimal IV. Don't wait for the optimal, conditions. Just, make your move and kind of adjust and roll as you need to. And it's not rocket science. I'm not the smartest guy in the world. So, but if you just, anybody who wants to try it, if you're just passionate about it and you do your homework and you work hard, I mean, it can be done. So, again,
Okay.
all the education you've done is just fantastic. So, I can't thank you enough. I don't know if I need to stay up here any longer or should let somebody else come up.
It's all good, man. And nobody's clicked the link yet, but
Okay, cool. Well,
no,
I'll let your listeners talk. I'll go on mute here and let you. They want to hear you, not me.
yeah, but I'm excited, man. It's on the books. We'll see how it goes. It's 21 days out, so we can make 23,000 and some change. Worst case scenario, it becomes a very expensive situation. But the beautiful thing about a strangle for me, whenever it's a stock where the fundamentals are pretty good, is worst case scenario for me, the stock tanks to like 10. Well, I got money from the put. I got money from the call. At some point, I'm going to adjust the short put and I'm going to take ownership of those shares. But I already got money from the short call. So I already collected that month of rent, if you will,
And don't you find sometimes when a trade goes south a bit like that, it actually sometimes ends up being the best trade
for
because
sure.
you take assignment, you kind of go a bit heavier, and then all of a suddenly in the next couple months, quarter, that thing is like up 100, 200%. And you never would have went as heavy if you wouldn't have kind of got assigned and got put in that situation so yeah, I mean, if you get assigned at 11, 12, 11, 10 on Oscar, I think you're going to be fine. You're going to end up like owning those shares and start to wheel the shit out of it for the next however long, because let's just hope that the big beautiful bill doesn't mess with it further because that's the only thing I can see that could push it down to 10. But I think the probabilities are higher on what we've got in terms of the strikes chosen, and you know, the bounce here soon is more likely than a further decline. So just got
Well,
to play the probabilities.
I think the one thing that I like about it is the sizing, right? It's not anything that's going to really break the piggy bank in any way. So I would welcome a move to 10 because I got the premium from the 1250s and I got the premium from the 18. So that's already putting me at an adjusted cost basis of like 1115 ish or something like that, 1110.
Yeah.
So
Hey, just to mention, you got EOS on there. I'm one of those crazy battery EOS people that
mhm.
um, I was back. I've been in EOS for a couple of years and been trading it, mainly holding it. I think I have a dollar cost average of a buck 20. But I'm glad to see EOS on there. I think we're primed and it's gonna be pretty. It could be pretty explosive here soon. As soon as we get a big order, that's the only thing the market is waiting on is when we land that first larger order that's close to a gigawatt. It's going to be lights out.
Yeah, no, for sure. And I don't know, and again, I don't know enough about that one. There's a guy Josh
Yeah, I know Josh. Yeah,
on my Twitter, and he talks about it all the time. So I kind of followed his lead on that. And then option selling Christian.
Yeah.
He seems to really be fucking on the deal. So
Yeah.
that kid, I met him in person, and he knows his shit. So this is just again, I'm just being fully transparent. Sometimes I copy off of other people, and
100%.
I don't know shit. I know Christian and I trust Christian, and he's got his brother, I think Cole, that does the fucking technicals. So they're like a virtual brokerage for me that isn't on my payroll, right?
Yeah. No,
and,
he
it,
is
and
awesome.
it is
And
awesome.
what strikes did you choose on EOS? What dates and strike?
Let me. I'm just putting this up here real quick, but
Oh yeah, sure. Sorry, brother.
second. So Oscar was 1250 and 18. Yeah, because that means I got like serious OCD when I do this shit, bro.
Those are the perfect strikes. I've been looking hard at Oscar like 3 or 4 hours a day for the past week and a half, and that's an optimal strangle. I mean, I kind of know the levels off my head now, and
Yeah,
12 and a half and 18 are literally the perfect strikes for a short strangle right now, assuming that we can get some momentum to the upside here next week.
yeah. Let me see if I can get it together here. So it's 12, 15, and 18. So I go.
I'm actually going to buy some Oscar right now. It's at 80 cents. I'm going to see if I can get some here. I'm going to sell. So I'm going to sell.
So you go to the chart. 1250. So I already put my little expiration date on there, and when I put this on the daily, I'm able to move this guy to the actual. That's the expiration date. And then now I'm looking for 1250 and 18. So I go to this little line right here, or this guy right here, price line, 1215 or 1250. And then I think the other one was 18.
Yeah, and I mean, I'm not a big person in terms of it's got to fill a gap, but gaps tend to fill, and I don't really think that gap at 13 totally filled. So there is that, but again, that 12 and a half strike is just optimal, and it's also there's a decent, not a lot of positive gamma exposure at 12, but there's enough that that'll definitely act as a dampener on volatility, and it'll definitely create a little bit of buying from market makers at 12 as well. So hopefully a lot of other people are looking at that level. Hopefully a lot of other people are also saying this is where I'm going to start putting in orders. So I think I just get a gut feeling 12 is going to be, if it gets down close to 12 and a half, we're going to see a pretty, they'll probably, if it is, it's going to be a liquidity grab down to 12, 12 and a half. And from there, it'll just do a
Yeah.
ping pong from 12 and a half, probably back up to 13, 13 and a half.
But if you look at, I mean, if you look at it, if you look at this is why I like putting those the price lines on there, or my strike lines, if you will, because if I look at this chart all the way to like November-ish, and if you look at the 1250, yeah, I call them my own personalized Bollinger Band trade, right?
Right.
So I got the lower end of the Bollinger at 1250 and the upper end at 18. I mean, this thing has spent a lot of time in between those two strikes right there.
Yeah.
So it's the sweet spot, if you will, like the line, the space between the 1250 and 18 is the sweet spot, and it's already here. So you just look at you only need three more candles, right? Because these are weekly candles. So the likelihood of it staying in that area seems pretty reasonable. The longer I stay in the trade, the more I can expand it. It creates a higher likelihood that eventually it would expire worthless and you capture all of that premium. That's where people need to start understanding the strategy. Is I'm trying to stay in these trades long enough to roll, expand, navigate, contract whatever the situation's calling for, so that I can create my own Sunny and 75 scenario to write it into an expiration at some point.
That's
But the
great.
more credits that I can take on along the way, the bigger ultimately the payday can be, right? Now,
Yeah.
that being said, on a massive situation where it shoots up, cut your losses or cover. Like, to me, it's cut your losses or cover. You don't want to fight the trend like that. You'll get wiped away like the poor people from the flood, man. Like, it just
Yeah.
doesn't, it's just not worth it. You can't fight that type of current, you know?
Yeah. That's why I'll never ever do strangles on Tesla ever again in my life. It's like
Have
if I
you,
it's,
have you seen where I finally ended up on Tesla? Have you been following that, dude?
no, I didn't catch that.
Dude, look at where I'm finally like fun Tesla, and I got it. Look at how big my highway is.
Oh man, that's that's awesome. And I mean that, but hey, screw it, you're getting your credit. I mean, it's that. I mean, you got to
Yeah,
do that with Tesla. I mean, it's just I just hate it. It can. So I ended up selling a shitload of puts on the Epstein day. So
yeah,
I was watching it, and the minute the Epstein tweet went out, the IV jumped like literally 10% on the strikes I was looking at, and I just was like, "Oh fuck, I gotta sell! I gotta sell right now."
yeah.
Um,
Dude, so it's 200 puts at 250, 200 short calls at 500, and there's a 1.1 million in extrinsic value for
wow,
June, for 342 days out. So
yeah,
Tesla can do whatever the hell it wants to do. Elon can talk about Epstein, can talk about Donald Trump, can talk about JFK, can talk about ET for all I give a shit. You know what I'm saying? What I know is this: is every day some of that data is going to the net liquidation value.
yep,
And and if it goes to 250, that's the best case scenario for me. If it
yep,
approaches 500, we will adjust, move the 250s up. And whenever you're playing this strangle game, the one thing that you really have to be hyper aware of is your bankroll. You got to know, like, okay, if this happens, how much is it going to affect my buying power and stuff? That's why I try to be at like between 50 and 65% of utilized buying power,
hmm,
because on a serious spike or a serious dip, you can't get wiped out. You know what I mean?
yep,
You got to be in a situation where you can pivot and react with the level head versus seeing your portfolio bleeding with parentheses because your buying power is negative. I mean, I'm giving you all the scenarios that have happened to y'all because they've happened to me too early on.
yep. Yeah,
So
I don't use margin either. I
yeah,
stopped using margin years ago, and I love that because I've heard you say that before too. And I always, so I'm a little bit maybe too anal about my liquidity. So I always have about 20 to 25% that I'm liquid,
yeah,
and I don't care that I might be missing out on some gains by not deploying it. Fine, I'll get my 4% in Robinhood, but I just I usually have some tail risk hedges on. So the one tail risk hedge I have right now is I have HYG puts, so junk bonds. So I
yeah,
have some September 72 strike puts on that, and they're just incredibly cheap vol right now. They're like set eight cents a contract for the September 72. And in my opinion, if shit hits the fan, the first thing that's going to blow up are credit spreads. And
yeah,
so, so I always try to keep a small tail risk hedge in place and then try to be 25% liquid, especially like with Oscar, there's, it's still a volatile stock and there's still a lot of things that could happen out of the blue, and there's nothing worse than I've just heard horror stories and myself a bit back in about 2015. I got blew up pretty bad, and so ever since then it's just like that's what I love about selling options, because if you do it right, it's really hard to like. You have to try really, really hard and have to do really stupid shit to blow yourself up.
Yeah. So this is EOSD or EOS. You were asking me about it earlier. So I have the 4 and the 6.
Okay, cool, good
And
strikes. I
then,
got it,
and then I have this little rectangle right here that you see there. You see that little rectangle right there?
Roger.
That's my 21 days to expiration. So I have that on my little chart as well. So I have the hard stop, right? This is the expiration date. And then I have like, hey, around here is when you want to consider managing this trade. To roll, expand, contract, navigate, just manage it. Sometimes managing it is just looking at it. Just give it a once over, give it a twice over. Make sure you're not missing anything. Your I's are dotted, your T's are crossed. You like where you're sitting, dude. If you like where you're sitting, you don't have to do anything. You don't have to push buttons on 21 days to expiration. It's just a good idea to really take a close look at the landscape and see what could go wrong. Because as you get closer to this red bar, everything's going to get elevated. So you got to really, really be comfortable with where you're at. Are you on this side of earnings? Are you on that side of earnings? Are you playing for the IB crush? Like, what are you doing? What are you doing? Like, what's the game plan? That's why it's advised to do these rolls enough so that this little bar right here, this weekly candle here that is my created weekly candle, that eventually becomes your expiration date down the road, and you
I love
never get to the point where you deal with that tail risk that is that red brick wall, if you will. That's why I
it.
put it in that color coding. So I'm real simple, dude. I keep this shit simple. I don't know why y'all are out there complicating it. I see some of y'all's charts and I'm like, bro, like, I gotta take a close look to see what the hell you got going on here, because this game's pretty simple. You got a line here for the put, you got a line here for the call. This is where you're going to manage, and you don't want to get to the fucking brick wall unless your shit looks like Tesla. You know what I mean? because that share price is like a drug driver, and she won't drive straight at the end. I
No
promise.
shit.
She,
I love that, TJ. That I'm going to start implementing that. I don't know why I haven't. That's really, really, I like that a lot.
yeah,
Now
like
I got a question for you that might help some listeners too. What are your thoughts on? So, say I've always have been in the mindset that if I'm at 80% profit
mhm.
and I've got a decent amount of capital tied up and I'm at 80%, what's your how do you think about when to take profit early, when to buy back, or do you prefer to just, if it's a pretty solid bet that they're going to expire worthless, do you ever just kind of say, hey, I don't want to eke out? So I guess like when it's, say, puts crater and I'm 80% and there's 3 weeks left to expiry, I generally take the profit because I don't want to eke out that 20%, because in that 3 weeks I feel like I could get better ROI.
did
Uh,
I did that recently on CleanSpark, because I had the shares that I bought as a swing trade, and I wrote them up like $3, made like 300 grand on them. It's 100,000 shares. I sold them in the 12s, closed out the cover calls attached to them, and I left the puts. I left the puts. And then I closed the puts out yesterday or the day before, left like 60 or $65,000 of meat on the bone that I knew that I could capture, but it was 1,000 contracts. So I'm like, dude, am I really going to leave? Um, uh, I think it was at $12, like $1.2 million to go get this 50, $60,000, which is a lot.
but in perspective of your account, it's not. And that, yeah.
But I'm just like, yeah, because I'm not comfortable writing calls on CleanSpark right now, because this thing could potentially go to 15, 16, 17. So that part's out right now. So I'm just like, and I'm not comfortable owning shares on any of the miners without selling calls. So I usually lose out on the huge run ups on the miners. I'm the guy that makes all the money when things are more steady, if that makes sense.
Yeah. Yep.
So again, you just got to figure out how can you play with them, and then also the IV is usually pretty high, so they've never been optimal to buy leaps on either.
Mhm.
So it's just that's the way that I play it. Like I make more money on the miners and the fucking crypto winners than I do when things are rocking and rolling. So it's just
Yep.
you gotta. So this is y'all's quote of the day, and I said this one by accident the other day to one of my the folks that I do my consulting business with. Uh, it's not about owning the stock; it's about learning how to make money off the stock. So I have figured out how to make money on a lot of these tickers, and ultimately, like for like on Amazon, I'm carrying a year to date negative because I brought shares over for Robinhood, so they punish you because Amazon was here, now it's here, so well, that's a loss, right? And I'm like, but I didn't buy them over there, I bought them down here, but it's whatever. But that's why the year to date looks a little bit screwy on Tasty Trade. But I'm like, okay, well, now I'm in a strangle where I've got 250 puts at 210, 250 calls at 230, 35 days out. If theoretically I can write an expiration, this 288 is going to go to the net lick side. And now my profit and loss year to date will be positive about 110, 115. I don't think that's going to happen because I don't think that Amazon's going to stay below 230 by then. So I know that at some point when I get to this 21 days to expiration, hopefully I already have it on the chart, and I do. This is the Amazon. So you can already see how this share price has been all over the place, and I have my sweet spot there. So you already have a visual representation of the facts. The facts are that sweet spot's not that sweet. You know what I mean? It's more sour than sweet.
Right.
So I have to probably be in this trade another 3, 4, 5 cycles to expand it long enough to where it starts looking like the real Bollinger Band. Because you see how wide that Bollinger Band is? That tells you that there's a lot of volatility anticipated. When it's a real narrow Bollinger Band, that shows squeeze potential because at some point the water's going to burst out, right? It's
Right.
like a kink in your water hose, if you will.
Right.
So this thing's telling you, hey, bro, brace for volatility, and look at it. And it amazing how there's been huge price fluctuations here. So I'd have to get extremely lucky to be able to write it out to the end here. So to your point, when do I choose to take profits or roll? It really comes down to this for me right here. It comes down to my year to date. Have I made the money that I was looking to make off of that stock? Because this isn't a one trade. This is the position. This is in lieu of owning the shares. I sell so many short strangles that it emulates the deltas that I would get if I owned an X amount of shares. Again, this
Right.
is the game that I'm playing. It might not be the movie that y'all are watching, but I'm the star of the movie, and I'm telling you what we got going on here in the production, right?
Right.
So I'm like, I don't have 10,000 shares of Amazon anymore. But if I have 250 strangles, well, that's pretty much the delta of about 7, 8, 9, 10,000 shares if you think about it.
Yep.
So I'm
Yep.
trying to emulate that without owning the shares, right? Because it's not
Right.
about owning shares for me anymore. It's about how much money can I make off the stock. And dude, I'm telling you, Amazon's going to be on the books until this fucker's got $1 million over here on the profit and loss. Because I want to make money on Amazon. I want to be in Amazon. So it's irrelevant to me. I'm only looking at my little bar, right? I'm looking at my little bar and I'm like, okay, well, how many candles do we got? We got 2 more weekly candles before it's time to do something with Amazon. And that's
That makes
all.
a lot of sense. Yeah. That so it stopped thinking stop thinking about what percentage I'm at or like my expiry is when I like it's more about that makes perfect sense and how and because you're just going to keep rolling her out because until she and whatever she does on either end you're just going to adjust higher or lower as it kind of moves as it
This
moves
is
forward until
this
you
is this is another example. This is Palantir. I'm at 115 on the put and 155 on the call. I got 2 weekly candles need to print so that it's time for me to do something, right? Because that would be 21 days to expiration. I'm still on this side of earnings at that point, I think. Or if I'm 21 days to expiration, I'm probably still on this side of earnings. But if I'm over here to my brick wall, I'm on the other side of earnings, and that's when shit could probably not work out for me, right?
Right.
I already know, based on just the euphoria overall of the market, that probably be a good idea to roll this guy to 160, 165. Because I already see the Bollinger Band over here outside of my Bollinger Band, if you will, my TJ sweet spot band, right? So I'm like, I want to be on the other side of that guy, just cuts. And we already see where it's trending, like this shit this shit could get out of hand pretty quickly. And yes, valuations and all that. I'm that guy, right? I'm fundamentals over technicals. But dude, sometimes the stocking, the stock market can be irrational longer than we can stay solvent, right?
Right.
And,
Right.
and in my case, since we are very solvent, it's the stock can act irrational longer than I can maintain a level head, if that makes sense. And
Yep.
that's why I prefer owning or doing short strangles now versus owning the shares, because it's easier for me to stay emotionless with these trades, because my job is just to manufacture the sweet spot so that eventually I can manufacture the win. Because if I'm sitting at 100 and say 200, this shit's looking like Tesla down the road, right?
Right.
And at that point, I don't give a shit what Palantir is doing or not doing. I know it's in my sweet spot because it's so fucking wide. I got the whole chart here to work with, right? And that's my game, is I'm going to stay in this thing long enough to manufacture the win. I have zero emotional baggage tied to it because I don't own the shares. I'm done beating myself up. Oh my God, they're going to take my shares away. Oh, I hate covered calls. I got like 20 people crying about covered calls on our WhatsApp group right now.
I love that. So
Oh, why don't you
I
get your ass on Tasty Trade and do strangles? That way you can be on team fuck cover calls too, because I'm on that team. Fuck cover calls. I don't like them anymore. I don't like them anymore. I like short calls though. But
right.
I like covered calls because they're an absolute pain in my ass. And if I can make more money managing short strangles and not deal with the anguish that cover calls have caused me, fuck that. I'm
This
dead.
makes this makes a ton of sense. And
I'm always telling my wife this, dude. Stop making life hard. It's already hard on its own.
right. No,
Stop making decisions to make life harder.
this makes a ton of sense. So I've been of the mindset more of I've honestly been I'm a vol chaser. So I've been chasing, I do my screen on bar chart and I look what's up in over 90% rank percentile, and then I deep dive into the company. But this makes a lot more sense where you have that range that you can manage with the short strangle, and literally you give yourself that movement in between your strikes. It makes so much sense, TJ. I think that's an amazing strategy. When did you pivot to do it? Because I noticed you did. Has it been over the past 6 months or so that you started to kind of move more towards the strangles?
Yeah. Take y'all's recorder out because I haven't told you all this. It took me 2 years of practicing short strangles off camera and losing a lot early on. A lot early on. Over $1 million
Hmm.
in tuition.
Hmm.
But I knew that it was a superior strategy for the right jockey. And I knew that I could learn how to be that jockey. So I needed to just figure out, okay, how can I really manufacture it? When am I just going to cut bait, et cetera, et cetera, et cetera? And I kept telling the channel, I'm seeing less and less value in owning a bunch of shares because
Right.
I just go heavier on the short strangles. And now it's just like, dude, it's real hard for me to own any shares because I could just go strangle the shit out of it. And everybody's like, oh my God, my 10X on Palantir and all of this shit. I'll go put my big ass bankroll on there and go make $400,000 with it in 60, 75 days and have no fucking emotional roller coaster bullshit that I'm riding on because it's not about owning the stock. It's not about being part of the fucking community. It's about making money. I am very clear on what my objectives are.
Right.
And my objective is my number one ticker is the fucking portfolio itself.
Yep.
And I don't give a shit about any of these tickers. I love me some Riot, but at the end of the day, I'm Team TJ, the wheel deal more than Team Riot, if that makes sense.
100%.
I have to learn how to make money off these stocks. These CEOs don't give a fuck about me. Alex Carp dumps shares like it's going out of style. Vlad Tenev drums shares like it's going out of style. Jeff Bezos still can't stop selling fucking Amazon stock to finance a wedding in Venice or whatever the hell he's doing. I don't know what the fuck Elon's going to go. I don't know what's going on with the market half the time, but I know this. I can make money off of these fucking stocks.
Yep.
When the right situation presents itself. You give me a Palantir that's gone on a massive run, and I'm like, I can strangle the shit out of that because there's not a whole lot of issue to the upside right now. Hood goes on a crazy run. I can go make money over there on the short strangle because there's not a lot of risk to the upside. Because what's the biggest risk with the strangle is the unlimited risk to the upside. The downside, we kind of know within a 25% accuracy where the bottom is on these stocks if we've been in them long enough, right?
Right.
Provided something unforeseen, like something crazy unforeseen. God forbid something happens to the Anthony Notas of the world, the Vlads, the key man risk, if you will.
Right.
Because dude, that could move the needle big time, right? Because there's a lot of these companies that I'm in have key man risk. So I'm like, I can navigate these short strangles and make a lot more money in shorter periods of time. And also, I was on a quest to do something, take beta out of my portfolio.
Mm.
And that is what I've been doing since I moved over to the Tasty Trade platform. How did I eliminate, or not eliminate, but reduce a lot of the beta in the portfolio? I stopped owning so many fucking ships.
Right.
So this is an evolution that you guys have seen over the last 3 or 4 years. 2 or 3 or 4 people come on this channel and tell me over and over owning shares isn't a capital efficient strategy. If you know how to truly sell options and orchestrate and manage and navigate the markets and stuff. And when you don't own shares, you take all the emotion out of it because you're just navigating the landscape to eventually create a sweet spot big enough to where it's like throwing the rock in the ocean, so to speak.
Well, and this is some of my ignorance. So when you're saying, so in order to actually a short strangle, you got to sell a put, sell a call at the strike range you want. So are you doing a spread on the when you're selling your put, selling it, but when you're selling your call, you're buying shares though to sell your calls, right? You're not doing or are you doing a spread to
No, look, Oscar, there's no share zone, right? Do you see it?
so
Hood, there's no share zone. I'll show you when there's share zone. Look at TSLL. It immediately tells you there's share zone. Do you see that? TSLL is the only coverage strangle that I'm running. See, on Robinhood, I predominantly ran a coverage strangle strategy where you have to tie up all of the share ownership, all the money on the share ownership, and then you sell puts on that ticker, and then you're obviously selling covered calls against your shares, right? You're covered. That's why it's a covered strangle. So whenever I realized that you could sell the calls without owning the shares and I
right.
eliminate having to tie up all of this money, it frees up all of this money to run a lot more short strangles. And I'm only going to own shares when I have to own shares to get out of trouble, if you will.
You're doing a call credit spread. for the selling this. You're doing basically a synthetic covered call on the what for the call side of it of the short strangle. You're doing synthetic covered calls, and then
No,
obviously
they're naked calls.
they're
Because
naked.
yeah,
Okay,
'cause, like on Oscar, I just did it in front of you. I sold 250 short puts at 12.50 and 250 short calls at 18. I don't own any of these shares. Now I got 17,298,000 and 6.389 in stock
right,
power. This says I can buy the fucking shares if I want to.
right.
But
But no, okay. I don't know why I missed that, TJ. That you're doing that. There's I see now, and you're right, because it is the biggest pain in the ass of a short strangle for me is managing is not being able to do it because I don't have the shares. But
right.
there's
What platform are you on?
so I was about ready to go with Tasty Trade, but I just could not be. So I was on TD Ameritrade for 10 years, and I switched to the hood, and I've just kind of stayed on the hood. And I was very tempted to move over to Tasty Trade because of the options side of it. But as hood kind of got better with some of their features, I'm still stuck on hood.
Okay,
So
so I'm going to show you something that Hood will never do. You ready?
yeah,
I'm giving it to y'all today because I don't give a shit. Okay, these are the reasons. Besides the fact that they kicked us out of the platform because they didn't like the way that our family office dynamic was set up. Fuck all that. I'm not angry at Hood, but I'm just going to show y'all that the things that make Tasty Trade superior real quick. And y'all can clip this shit, send it to Vlad, get your shit together, and maybe you'll get a lot of professional traders on your platform. But until you do this, you're never going to get us back. Ever. Ever going to get us back because you can't compete. You can't compete. The first thing is portfolio margin. Do you know what portfolio margin is?
sure. Portfolio margin, yeah.
It's huge. It's huge because you only need a fraction of the money to as collateral, right? So I want you to look over here at this cap requirement. That's the capital required to do these trades. So let's just go look at Oscar because we just did it together, right? So go on your little Robinhood platform, and I want you to type in 250 times 1,250 bucks, and that's the collateral that you need to do this trade, right? So
Right.
you have 250 times 1,250 bucks. What is that? 1,250 times 250. So you're already out 312,500 bucks that they're going to put in escrow. Yes or no?
Right. That's
And
your
you're able to make 12,500 if you did it right now, right? Because that's the mark. That's the market, right? I
right.
got 45. Now you can get 50, right? The deal got better. Worse for me because I'm already in the trade, but better for the newbie, right? For the new person coming into the trade. So you get $12,500 for tying up 312,500 bucks for 21 days. Yes or no? That's how
Really?
we robbing it.
Okay. Yeah,
I
because
used to think that was a great deal. There's no fucking way on God's green earth you're ever going to get me to do that deal again on Robinhood, and I'll tell you why. Because on Tasty Trade, I also have the ability to sell the 250 calls without owning the shares yet and bringing in another $12,500. And the cap requirement earlier, it showed it on there. It was like 50, 60, 70,000 bucks. I forget what it was. I can pull the trade up and act like we're going to do the trade again, and it'll tell you the capital requirement, right?
so this is crazy. So I wasn't catching on to this at all. So yeah, I have 112,000 hung up in Oscar right now. Obviously,
Yeah.
my
So
account's
this is
nowhere near it's nowhere near as big. My account's not as big as yours, but still,
hold
like
on 1 second, Ryan. Hold on
yep.
1 second. Everybody's showing up to class. I'm telling y'all to listen and pay attention now because I've never dogged Robinhood and I'm never going to because they made me, so to speak. I honed my skills on that platform. But there's no fucking way I would ever go back to that platform. One, they don't want me. Two, I wouldn't go because I can't do this. Because I'm going to show y'all here, if I want to do another 250 contracts and another 250 contracts, you need to go look at the buying power. You need to go look at the buying power, and I'm going to go another 250 contracts here. and let's just say we get it filled quick, 95, review and send, buying power. I'm gonna make 23,000, and then I'm only gonna use $44,000 of my buying power. The portfolio trades so much larger. I'm able to make so much more money if I trust in my ability to manage. If you cannot do that because they're giving you a lot of rope, what do people do with a lot of rope? They hang themselves, right? So you got to be careful because you're left to your own devices, so to speak, right? Like the song Hotel California.
Right.
So you got to be
Right.
careful, dude. This isn't. I'm not saying it's all peachy, it's all creamy, it's all rosy. Everything's only going to go up and to the right, dude. No, what I'm saying is tasty trade the way that I perceive it, because it's my perception, it's my reality. Is this is a trader's platform. And if you're that fucking guy, if you're that jockey, we're gonna let you go ride to the winner's circle because you're that guy.
Yeah.
So when I went on that platform and I said, y'all have never seen a fucking trader like me in my mind. Because the risk tolerance that I have, nobody's ever fucking seen it on your platform. And all this other shit, a 21 days to expiration, do XYZ 1, 2, 3, and only 1.25% of your point. Shut the fuck up with all that shit. I'm gonna show y'all how to make some fucking money. Shut the fuck up, strap yourself in, and let's go make some money together. And then one day they'll maybe invite me over to Chicago. Maybe they'll, I don't fucking know. I don't care. I'm here to make money. I'm not here to be famous. I'm not here to be liked. I'm not here to be any of those fucking things. I'm not here to be pumping any of these fucking tickers. My favorite ticker is our portfolio. They are tools to make money. You know, it's like Sergio says, they're meant to be bought and sold.
Right.
Nobody called, has Vlad ever called you and asked for permission to go dump shares of Robinhood? Dr. Carp ever called you and asked for permission to go dump shares of Palantir? No. Then why do people care so fucking much what the community thinks? Because you have to make a decision to make a profit for your family. It's fucking hilarious, bro. It is financially retarded to me, the shit that I see on Twitter, the shit that I see on other YouTube channels, because people act like they can't be logged if they choose to make a profit off of a company. It is absolutely fucking asinine. As Stephen A. Smith says, that's a 10, that's 11, that's a 12. It's fucking retarded. It's ridiculous.
100%.
My
100%.
job here is to sell puts, sell calls, roll when it makes dollars and cents, and make a lot of fucking money for my family. That is my job here.
Roger that. Same
And,
here.
and you
Same.
can get down with that. Click like and subscribe. If you can't, well, fuck, man, go have a circle jerk somewhere else, because that's not what we're going to do here with these tickers. We're going to use these tickers, and we're going to use them and abuse them, and we're going to make a lot of fucking money. That's what we're doing today.
100%.
That's it, dude. I ain't a fuck. I love Team Riot, but at the end of the day, we got to be Team TJ first here.
Yep.
You know, I got to be Team TJ first because that's who my wife is married to.
Yep.
You know, if the opportunity's there with Riot, we're going to make a lot of money with it. If the opportunity is there with Pouncer, we're going to make a lot of money with it. If the opportunity is there with SoFi, we're going to make a lot of money with it. If there's not an opportunity there, we got to go look elsewhere. It's just that simple, dude. It's not show friends, it's show business, right? We've all heard the fancy lines and all the fun movies that we like.
Yep.
Gee, but I'm showing y'all the implementation of it, and I love Robinhood, dude. I love the platform. Man, dude, I wouldn't be here if it wouldn't be for them. I wouldn't have my career if it wouldn't be for that platform, because it was so the user interface is amazing. It's so user friendly. It's amazing. You can click buttons with confidence. You don't want to screw it up, and that platform allows you to do that. But this platform allows you to do a whole lot more if you're ready for it, though.
Mm.
You know, because I call it the rich uncle who left you the G6. Sounds like an amazing opportunity, right?
Got to be ready to drive it, though.
You gotta know how to fly the fucking plane, yo. You gotta hire a pilot. I mean, so you gotta do the upkeep, the maintenance on this shit. It could potentially be the biggest thorn on your side, right? He thought he was being real cool, giving you this badass G6, and it could be the death of you, so to speak.
Yeah.
So I say that Robinhood is an absolute amazing platform. You want to sell put, wait it out. own the shares, sell the covered call, wait it out, own your shares, buy the calls. You just want to do the basics, that's cool. But if you're ready to manage, if you're ready to go to that next level, Robinhood just isn't the right platform for that. It just isn't. It simply just isn't.
I
People call me a hater. You call me whatever the fuck you want, dude. I'm totally grateful to the platform.
no, I think it was like, I'm Christian. God put me here to hear this because I did not realize that what capital I have right now, if I can execute that, and I'm already by name, like you said, it's Team Ryan, and I am not married to any fucking ticker ever.
Yeah,
Like, I find that retarded also. Like, why are you like, we're here to make money. But you can do so much more with your capital with what you just showed me. I had no idea. And you don't have to have that bullshit stress of owning the shares.
bro.
I had no
Covered
idea.
covered clause. I thought my hair was growing back. Covered clause eliminated. Covered clause eliminated that shit, bro. Hims ain't gonna help me. Covered clause has eliminated any chance of hair regrowth, bro.
Yep. I
Any chance of hair regrowth has been eliminated because of covered clause.
trade it. Just if don't get hymns, don't get minoxidil. Just sign up to Tasty Trade.
No, because what happens is you get stuck with a lot of dead money when you're managing these covered calls and rolling out to January of 27 and 28. People are looking for fucking January 29 on the thing already, dude. It's
Dead
crazy.
money. Yep. Dead money. That's the way to put it. And the other way around it on Robinhood is, you can do synthetic covered calls, but that's stressful and that's too much work. And it's also, you're constantly managing that position with the overall position you're trying to do a strangle in. It's too much. Where this is, I can see why you went over that. I'm gonna have to. I
That,
hope.
that being said, let's give Robinhood their flowers. They're getting a lot of people in the game. They're getting a lot of people in the game. I wasn't ready for Tasty Trade until probably a year ago. I say I was ready.
Wow, that's
It took me a while to like hone my skills and be like, okay, I legit see how this platform is costing me money. It's no longer making me money. And also because of the fills. That's a whole different conversation for another day. Because Robinhood ain't free. They got shitty ass fills. That's how they make money. It's called payment for order flow. And you're the payment. You're the customer.
Yep, big time. That's it.
They don't work for you. They work for fucking Citadel, right? Like they don't work for you. They work for those guys.
The
Because
more I swipe, the more I can swipe up, and the more I can deposit. That's it. There should be no illusions of what Robinhood's ultimate game is. I mean, we all knew that in 2021 after the GameStop stoppage, right? But yeah, no. Sorry, go ahead though.
yeah, I mean, I gave it to y'all today, man. Just straight up uncut. It took me a while to get to this point, though. I wouldn't say that if you just don't have the right risk tolerance, the right experience, the ability to manage, the ability to stick with the plan, the trading plan, then Tasty Trade is probably where you'll go blow up your account.
Hmm.
See, a lot of times brokerages like Robinhood have these systems in place, and they're for your protection as well. Because Robinhood doesn't want to get caught holding the bag either, right?
Right.
So the only way to eliminate that is we'll just don't create a bag to be held.
Right.
Whereas Tasty Trade, they have like this algorithm, right? That sees, hey, this person's not crazy. Like every time this happens, they do this and stuff. So they start trusting you, right? So that algorithm is kind of gauging what you're doing and what you're not doing, why you're doing it, why you should be doing X, Y, and Z, etc. They're looking at your sizing. They're looking at all the aspects of your portfolio management skills.
Hmm. You just convinced me. Like, I think, in a lot of listeners too, probably. I'm not ready for Tasty Trade. If you were just ready a year ago, I am sure as shit not ready right now. I need to stick to the basics, kind of gut it out with doing your regular covered calls, CSPs, doing strangles that way. See if I can be successful, manage risk, do it properly, and see if I can do it for over 6 7 months consistently. Maybe then can think about. I see what you're saying. Tasty trade is you don't want to get on that horse till you're ready to ride it.
Yeah, and then also the other thing that I looked at was it was just a game of math. So I go sell the cash secured put for 12,500 on Robinhood, and I use $312,000 to do it. Right.
Right.
Well, if I'm able to sell the other side on Tasty, maybe I could go further out of the money on both sides. So I could be a lot more conservative as well because I've got another source of income that I'm now qualified for, if that makes sense.
Yes, it does.
So then also, since I got both sides going simultaneously, now I can legit close the entire trade out if I was just cash grabbing at 40 or 50%. Why? Because that would be the equivalent of 80 to 100% on just a single leg, right?
Hmm.
And that adds up to the same money that you would make on Robinhood. And I never have to get to expiration because in order to capture 100% of the move and 100% of the premium on Robinhood, you got to stay to expiration, yes or no?
Yes.
In any platform for that matter,
Right.
right?
Yep.
But if I've got $25,000 that we just collected on Tasty Trade, I could probably stay in it to 20, 19, 18 days and look up and see the open P&L at 13,000, whatever it was, 12,500, which is all that I would be qualified for on Hood, and just close the trade, widen my hands, and move on to the next one. That's a possibility that I have. So for somebody to tell me that they think it's easier to make money on Robinhood, you just don't understand simple arithmetic, my guy. Because I could be further out of the money on both if it's the right setup, it's the right situation. If you're going to go do it on HIMS, because I got caught trying to do it on HIMS early, and then it squeezed. I took a real quick loss, but now I'm back in HIMS because it settled down, right?
Right.
I mean, again, it's like the opportunity is there, but this is a platform where the jockey is very, very important, and you're the jockey.
Yeah, because I can see what you're saying where the capital is freed up to that extent to be able to position yourself, and then also not just you can do it across multiple tickers. Where I'm constrained in my currently right now with Robinhood because of that, and also because if I do try to open up any type of position, it's $312,000 for the Oscar puts selling those, right? And so yeah, that. But I can see what you're saying though is because you're given that freedom on Tasty Trade, it's probably it can happen. You can blow up a lot quicker because of that.
You
So
can because you just see, oh, there's no way it's going to happen. You go look at your little chart. You look at that Tesla 250 and 500. Oh, what could possibly go wrong? I'm just saying, like
yeah,
you can get pretty cocky very quickly.
yep,
So I'm constantly looking at if shit hits the fan, what are my top three moves? That way I'm out of harm's way. We lose two or three, $400,000, and we live to fight another day, right?
Roger.
But I'm not gonna sit there and be stubborn and leave 15 positions on if shit is hitting the fan. World War III is announced or something like that, right? So you have to have a game plan because cash is a very critical component in the cash game.
Yep.
I mean, how am I going to go to the poker house with a $300 buy-in and I got like $200, $300 with me and no mark accessible to me, right? No credit with that poker house or anything like that. I mean, dude, I'm just going to go in there. I'm going to be the short stack and I hope that I could double up and try to make a run out of it. I mean, bro, the deck stacked against you.
Yep.
So if you know how to manage your emotions, if you know how to manage your bankroll, Tasty Trade is simply the superior platform. It's just really that simple. Now keep that in mind. I'm an outlier. This is all I do. I sell options for income, right?
Right.
For the majority of the people, that all you want to do is just like, buy and hold, buy an option here, do this, do that. Robinhood is 100% adequate for you. So there's nothing wrong with what Robinhood's got going on. The vast majority of the people that have no interest in wanting to learn the game at this depth. And that's probably why this channel is never going to grow that big.
Right.
Because I'm going to say this, and I'm going to say it real, real slow. My goal is to make $100,000 a day. There's very few people that have that goal. You would think a lot more people would, right? Sounds great. There's a lot of fucking people out there like, oh, if I could just make $100,000 a year, I'm fucking SFL set for life. Like, motherfucker, I used to think $100,000 a year was a lot of money. Now, like, I barely pay the mortgage, and one of the cars is going to have to go because I probably can't pay both of them now. And forget the motorcycle. You know what I'm saying? Like, it doesn't go that far after taxes, right? Yes or no? It doesn't go that far. So it's just, you always think something's hard until you've done it.
Roger. Yep.
And then now it just becomes the norm, right? But somebody had to run that 4-minute mile.
Yep.
It's certainly impossible for me. I can do it on my bike. I can do it on the Tesla real quick. But I'm saying is, I wanted to sell options, and I wanted to do it at the highest level possible. So it made sense to me that I wanted to be on the platform that was designed by the option seller for option sellers. So it made all the sense in the world for me. So
Yep.
I had already created an account. So whenever we got kicked off the Robinhood platform, it was so obvious to me that we'll just move the money over to Tasty Trading Call after.
Yep. Because he was the one who came up with Think and Swim or Think or Swim,
Yeah.
and I mean, I ran a trial run of it, and when I was thinking of moving over to it, and it is amazing, but I didn't even understand half of it. So I think my big takeaway, and again, I feel blessed to be talking to you because I am very serious about doing this full time, and I would love that freedom. My job, I'm exhausted. I wake up at 3:30 in the morning, and I get home at like 3:30 or 3 p.m., 4 p.m. Got a long commute, but anyways, the big message I'm taking though is it's no joke. It's very powerful, but what's the Spider-Man quote? With great power comes great responsibility too at the same time.
Yeah.
So I think maybe a paper trading account would make sense and try to execute those strategies that you're doing, and see how that goes. See how I'm able to manage, if a tail risk does happen, how do I react? How do I manage that when I have a naked call out there? So I think that I mean, I have a hard time. I don't use margin, so the naked call side of it would probably for me cause emotion that would interfere with actually executing the trade until I get to a point where I wouldn't allow emotion to kind of come into play when you're in that type of position on a trade. Then I might feel I'd be ready. But TJ, you're what you give back to people is amazing though. Like you don't have to say anything to anybody, and you can sit there and make millions of dollars a year, and you don't have to say any of it. Like that's what I love about you is, you know, you, you share so much of this knowledge. And like I said, it's really, really, really crazy that you allowed me to come on here because it was just last week that I said to my wife, I'm going to really do this, really try this for real. And I'm going to give myself 3 months to see if I hit the targets. So to come on here though, and to be able to talk with you, I don't know. It also makes me really excited, but also makes me realize how incredibly fucking hard it is too.
It is, man. It is. That's why there was only one Jesus, because he had a real hard job, right? But anyway, just to piggyback on that, the Spider-Man quote, everything's always stolen from the Bible to a certain extent, right? With what is it? With great comes responsibility. What's the quote on
Yeah,
Spider-Man?
great power comes great responsibility.
So I feel like that's just a knockoff of Luke 12:48.
Right?
And to whom much is given, much is required. Is a well-known quote from Luke 28, the King James Version of the Bible. It emphasizes that those that have been blessed with more resources, talents, or knowledge have a greater responsibility to use them wisely and for the benefit of others. And I feel like I'm in that situation for whatever reasons, unbeknownst to me. So I feel like it is like my mandate, if you will, because money is mentioned more times than anything else in the Bible, to have a channel that helps people get their money right. Because that's why I like SoFi so much, because of the little cliche, get your money right.
Yep.
Like I've told the story a couple times. That's the reason that SoFi is my favorite company.
I bank with SoFi, so that's all. And yep.
It literally is because of their cliche. And I happen to be very fond of Anthony Noto because I saw a fireside chat where he talked about being a free lunch money kid. I grew up as a free lunch money kid. For those of y'all that don't know, it's the people that rely on government assistance to get the free lunch at your local school.
Yep.
Other people had to fork out, a dollar 50. It all depended on your parents' financial status or whatever.
Yep.
So I was a freelance money kid. So whenever Anthony Noto talked about his mom being a divorcee, and I think eventually he had a stepdad or whatever, but he grew up as a free lunch money kid, it resonated with me.
Hmm.
So that's how I got into this whole SoFi thing after my son had told me about this new bank that was out there that was going to do some cool things, and it was the new way that people are going to be banking. Dad, there's people don't like going to the bank no more. I'm telling you, like the brick and mortar banking is a thing of the past, and this is the mind of like a 19, 20-year-old telling me. He's like, Dad, things are changing, times are changing. This is where all the finance is going to happen in the future on apps like this.
Yep.
And I was like, you're crazy. I said the same shit about Amazon. No way. I like, you gotta try on your clothes, right? Who's gonna buy clothes on Amazon? I gotta go out. I gotta try on my clothes. How am I gonna buy it? How are they gonna fit? Dude, my wife's got a shipping and receiving business going on right now. She buys shit on the internet.
Yep.
She ships it back. I'm like, I didn't know that. I think she might be involved with Amazon somehow or whatever. Like she knows
Yeah.
go to this store and do shipping and receiving at some of these stores that sell shoes. They do shipping and receiving there. It doesn't even have to be like at a UPS outfit. So I was just like, dude, this is crazy. But
Yep.
that's where the world is going now. It's all about convenience and the world is at your fingertips and all that stuff, right?
And that kind of circles back to Oscar. I think that's why people really like, if you start reading some of the posts and digging into it more, it's again, it's has an intuitive app that really connects you. It has that kind of hymns vibe or SoFi vibe or hood vibe. You know what I mean? It's kind of going to be it's kind of the insurance that, you know, our kids, younger kids they're gonna gravitate towards that type of platform for health insurance, especially if it's gonna be middle lower income too that are in Gen Z. A lot of it's tough out there for them right now in terms of jobs. Incredibly hard to buy a house. I follow Sim Farsan a lot, and I think he's kind of spot on with some of his takes about populism that's taken hold and all of that. But Oscar, I think fits into that SoFi kind of theme as well, but just for health insurance. So it kind of ties back to all you're saying. Kind of ties back to Oscar here as well, and just like SoFi, and just like Hood a year ago, the fundamentals are there, right? Like a year ago, everybody was saying, yeah, the second that either interest rates go down and they're not going to get interest income, or the second that crypto goes down, it's going to crash, and there's no way. Like when it was $16, like I loaded up when it was $16 on a member of August last year with the yen carry trade, right? And I haven't sold those shares because I mean, I just sit there on that app all day, and it just has that interface. But Oscar, I've downloaded it and played with it, and Oscar kind of has that feel too, that it kind of might have that same kind of network effects that really take hold that can be a moat. But like we said earlier, though, it's just a trade for me. Though I'm not going to get married to Oscar, and I might be Oscar the Grouch if it blows up on me, but that's about it.
Yeah, I'm excited about it. We'll see. We'll see what happens. I mean, it's a decent starter position. 250 short puts at 1250, 250 short calls at 18, and we're already 21 days out, right? So this is a cash grab. Like, I'm not doing the 30 to 45 days out, managing 21 days out. So this is designed to, it either works or it doesn't. If I get comfortable with it, then we can kick the can down the road 45 or 60 days, maybe widen it a little more. It turns out that maybe I'm more comfortable at 20 because I saw some good things on the fundamentals and stuff. So this is an invest and investigate situation later. You know what I
Yep.
mean? That's
Yep.
all it is. So,
Yep. Well, hey, TJ, my wife is going to be home soon. I
yeah.
just can't thank you enough for allowing me to come on and also teaching me and talking. So I feel really blessed to have been able to do this. And funny enough, it was a day that I was able to leave work early. So usually I'd still probably be stuck in the office, but I was able to come home early today. And so God works in mysterious ways. So I really appreciate you and all the work that you do and all that you share. So like I said, I can't thank you enough for letting me come on, and I'll be looking forward to more of your content here coming out. So
Yeah, when I manage that trade, which will probably be in a week or two, maybe 2 weeks or so, we'll look at it to see whether or not it was just going to be a trade, or I want to potentially keep it on the books for the long haul because I really like what I see. Because I'm gonna do some homework. I'm gonna put in probably 4 to 6 hours into Oscar and really learn about it. Go listen to a couple of podcasts because I'm sure people have already talked about it. So that's a real quick way to kind of get the Cliff Notes version of it, right? Versus doing all the homework yourself.
yeah. Little Seeking Alpha doesn't hurt. I use Seeking Alpha just to get a test the temperature of what are some of the armchair analysts saying about what they do give kind of some good basic outlines of the main theses, at least in some of their articles. So yeah, and I'm Ryan T Hawks on
Very
Twitter.
cool.
So I follow you obviously. So but yeah, I really appreciate it again, TJ. And
You're right. Hold on. Am I following you already or no?
no, you wouldn't follow me. I'm not an account that would heavily.
What is it, Ryan? What
R
T?
Ryan and then letter T Hawks Hawks.
Do I picture of your dog or
Yep,
no?
that's it. That's my dog.
There you go. I got you. Oh, there's beautiful mountains in the background.
Yeah, that's my favorite place ever. Jungfrau in Switzerland, the Eiger monk in
Dude, we're
Jung.
going. We're going to Switzerland in December.
Are you really?
Yeah.
Where? What part?
So we're staying in is it Lake Lucerne? Some resort called Bergenstock, I think. And
Yep.
then we're gonna do a couple of nights in Zurich, and then from there we're going to Paris. And then if we're able to extend the trip after that, we want to go to Italy for like 3 or 4 days, just a couple of cities.
Oh, beautiful.
But
TJ,
I don't
look,
know if I'm going to be able to do all of that on the Italy side. The wife's already said no 45 times, but I'm always pushing the strangle.
I, yeah, there you go. Right. I'll tell you, if you can convince her and you can fit it in, it's called the Jungfrau, Junga, Young with a Jungra.
Send
I'll
me the
send you.
DM
Yeah,
on
it's
Twitter.
it's. I lived in the UK for about a decade, so I did get around Europe quite a bit. But the Jungfrau, that area is the most mind blowing place I've ever been. Like it's the picturesque kind of Alps that you think about, but it's just also just it's unbelievable. So if you can convince her, Jungfrau would be worth it. So
Awesome, man. I appreciate you, my man. Thank you so much,
all
Ryan.
right, thank you, TJ. Thank you, brother.
Bye
God
bye.
bless. Yep.
Andrew, welcome. I got a couple of minutes, my man. I am almost out of my fasting window, so I am ready to go eat. But I'll give you a couple of minutes. What do you got for me, my man? Pleasure to see you.
I can you hear me?
Yes, sir. I can.
I just wanted to thank you, man. There's that you are the only person doing this, and like for whatever reason, like this works for me. This is like I'm 43 years old. I mean,
Right on.
and I mean, if I would have known about this 20 years ago, like just how it works. I mean, it's like yeah, it's slow money, or that's what a lot of, I mean, it's slow money, but if you have money, like, it's just, man, I mean, it's just, my account's just growing. It's just growing, so.
Good for you. Well, give us your top 2 or 3 plays real quick.
Well, I was really into just like trading, and I think like just trading Bitcoin and stuff, and I really appreciate you know how it made me stop spending money, because everything's about marketing. So I'm like in this riot, right? And I sent the covered call out, like, because I'm used to, like, the guy that I was learning, it was shorting Bitcoin, and I'm like, I mean, but and it's, I mean, it's still gonna make money. It's like this game is easy, and I'm like, when I talk to people, like, even like BR Baller, how he hates this game. Like, it's like, what the heck? What are you gonna do? And it's like, oh, I don't have $10 million to invest. But I wish I would have got more into SoFi. But honestly, I didn't really make a lot of. I didn't really know. I mean, I got like how the game worked. I found you, what 5 months ago, and I never knew how this. Like, I learned like, because everybody in this space is like, how you grow your social media, and that's why Amit's so cool, right? Like, how you grow your social media
Awesome. Yeah.
is just you can make $100,000 today, like with $10,000, and that's people promote that, like, that's what gets attention. And I'm like, I'm just sitting here, I know where to put every dollar I get. It just goes into my account. And so I got like 400 shares of Neo. It got a nice pump today, and I sold the covered calls at 450. Got like 16 cents. I could have got like 20 if I would have done it. But I mean, and I got a few leaps. I got the $4.50 calls um, for September 19th, and then they were all the way down. I started at 93 cents, right, and they went down to 10, and I bought like two more. I'm like, but you know what? And one thing, it's like towards the close of the market, and you don't hear, like, the option chain levels out, right? So it's like, and you don't talk about this, but I mean, I'm seeing how much, like, money there is, like, just take a long ways out, TSSL, like, $40 call, if it's at 1 cent, you know I mean, I haven't even done that, but I'm like, I'm really seeing how that can work,
Yeah.
and that can build a small account. Like, so that's actually really, and then when you make money there, you just buy the shares, and yeah, I'm definitely only doing the covered calls and the and puts on Robinhood. But yeah.
Yeah, that rock stock's a monster, man. It is an absolute monster. Crossroads told me about it early on, Roy. So I want to give a shout out to Roy. We had done a podcast on PayPal a couple years ago. He was like, "Hey, man, really look into Robinhood. I think it's going to do some great things." And he said, "I'm not in it yet, but it's something that I'm studying." And so I took action offline, and it worked out pretty well. And then whenever I started doing the podcast with the Mitt, doing, on Fridays, I'd be on his channel, and he would, we would do some trades together over there. Made like $500,000 on Robinhood last year. And then now this year we're starting to build it up again, just with the real massive short strangle now that Robinhood got to these elevated levels. I think Dio's going to surprise people, but I have a price target of $7.50 by the end of this calendar year on Neo. So I think Neo is about to make a lot of back holders and brag holders by the end of the year. So I think that's going to be real fun for a lot of those folks as well. But it's an absolute pleasure to meet you, man. I appreciate the kind words. I got to get rocking and rolling. My wife just showed up with some catfish from Papa Do's. So I'm going to break my little fast by eating some catfish and some shrimp and some chicken noodle soup before that. So anyway, appreciate you so much, man. Keep tuning in. I appreciate everybody from the chat. Hope y'all enjoyed it today, man. I gave it to y'all raw and uncut. Shared some things that I hadn't really shared with you guys on the channel previously. And I hope to see you guys next week. Thanks, Andrew, man. I appreciate you. You have a great day, sir.